This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video.
In this video, I'll be doing a technical analysis going over oil. So I'll be taking a look at WTI, USO, maybe some other ones. I know there's kind of a disconnect between actual oil prices and a lot of what the oil producers are seeing. For example, Exxon is pushing 52-week highs while oil is still dropping in price. So we'll talk about that, but I don't want to talk about the producers so much. It's more so just the commodity. I will be doing a technical analysis over precious metals, primarily silver and gold, but I will cover palladium and platinum. And I do want to take a very quick look at treasuries. Now, this video is going to be fairly short. I'm going to try to do a fairly quick analysis over all these different symbols. So I will post all the time slots and everything in the description. So if you're looking for just a specific part, you can go ahead and skip to that. Anyway, let's go ahead and get started with oil. Now, just briefly, when I analyze or, do any technical analysis over commodities, I like to stick to longer term timeframes. So we will be primarily only using the weekly and daily time frame for this. And I will be not going over the entire theory of what's going on with the moving averages and everything. Um, I apologize for that. It's a lot to explain. So I'm more so going to be trying to focus on the trend for each symbol slash commodity, and we can kind of piece things in from there. If you have any questions over any of these specifics, feel free to ask in the comments and I'll be more than happy to explain it. Just for this video, I want to keep it really short. So going over the weekly time frame, we are seeing weakness in oil still. Okay, we're still below the 20 month, which on the weekly time frame, that holds a massive weight. That is basically the are we selling or are we buying line. On the daily time frame, we're sharing a very close sentiment, and that's this very dark red line in the center. That's the 200-day moving average. We're trading well below that, and we've been doing so for quite a while now. Even with this news, the overnight is not causing oil to break out or fall. So what I think is going to continue happening is we're going to continue seeing consolidation within these moving averages while continuing to push down. Okay. Um, I do believe we'll head back towards this 60 gap. It's kind of hard to see with all the moving averages and everything, but we are seeing bearish structure forming downward. Okay, this is looking like an inverse cup. Very likely going to see that 60 again. Now, in WTI, this is the one I'm really looking at the massive dip for. We have very bearish structure in here. Now, possible bullish structure is that potentially we do have liquidity for an inverse head and shoulders. And I know many are going to say, okay, well, that's double top. That can't be liquidity for bullish structure. However, um, this double top, let's see, that's filled already. That's filled. Sorry, I will have to explain this another time. So there's potentially a little bit more selling within this double top. Okay, I will mark. Where is horizontal ray? Right there. The 132 looks like the major dip range. So if we hit that range, that's when I'm pretty much going to be loading the boat. Uh, Potentially we could see a little bit more downside, but again, looking at WTI, let's just go ahead and do a longer term look over the moving averages and everything. Same deal here. On the weekly time frame, we are still below the 20 mo. So with everything being so low, I do expect the dip downward, and I do expect buying to start occurring from that. Um, Remember, for the oil sector, we're pretty much at recession level prices. This is something, obviously I can't make a financial suggestion, but this is very rare to get these type of prices on oil. And with these potential leg downs, um, these potential legs down, excuse me, you could be entering oil at prices that potentially we won't be seeing lows on like this for years and years to come. Now, if we're heading for a major recession, we potentially can leg down further. However, if you remember a few weeks ago, I went over a graph specifically going over oil and how it correlates with recessions. Generally, you see the major leg down prior to the recession. And then you have the slow, gradual recovery as the recession is seeing its duration ran through. And then by the end of the recession, you start seeing, the major recovery within the oil prices. Now, this still holds fairly true. And I apologize for the sloppy graph for a moment. But let's just go back to right back here. This is the COVID recession. You can see oil pulls down. Generally, that major leg down, and this occurred. So this occurred basically right when the COVID pandemic was being announced. Oil was starting to see a little bit of selling prior to that, but as you can see, it was continuing to see a little bit of downtrending, heavy consolidation in here, and then it just really fell off the cliff. Now, granted, I'm not expecting a whole, falling off a cliff ordeal. However, um, potentially we can be seeing a very large leg down. Now, within the weekly time frame, that large leg down would pretty much translate to that 16 within the USO. Do I think we're going to get that 16 price? I would heavily bet against that. I don't think we'll be seeing that price again. However, could we be seeing this a 46 price? Potentially. Um, I'm not going to be trading USO specifically. Again, the one I'm looking at is the WTI because you can absolutely load the boat on this, and it is at all-time lows. It is at all-time low prices. Um, Besides, there was the dip to the 102. Um, However, it's currently at 1.64. Uh, with another dip down, very likely we will see that same gap or very, very close to it. And that'd be an awesome buying opportunity. The potential upside on this, just seeing how fast we've dropped, and again, this is the weekly time frame, so this is showing since the end of 2022. However, the high price on WTI was up at 887-ish, give or take. Even before that, it pulled to 940. So buying WTI at dollar 30, that's a no-brainer. You sit on that for a couple years, spend a few $1,000 and, you know, you're gonna see 300, 400% on that. Um, Again, not financial advice, but that's the trade I'm really looking forward to. Moving into 2026, especially, is this oil trade. I really think there's going to be a lot of room in oil, especially if we truly catch that dip.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
Next, we're getting into gold. Now, this is the actual futures pricing, so this chart's going to look a lot cleaner than my actual gold ETF chart. Um, Again, this is the weekly time frame. This is the buying channel since, you know, there's been a buying channel available. It's since the very, very beginning. Now, with that said, going to the daily time frame, we're still very far off from this buying channel. Okay, and I have to pull it back 1 second just to get this channel aligned. But in this current structure, we are, see, we have closed that cup, and at the top of this cup, as always, we always talk about bearish structures at the top. We have the bearish structure, and potentially we have the bullish structure building. Now we will zoom in on this in just a second here, but for a standard up and handle breakout, this is looking extremely good to be pushing towards not just all-time highs, but that 4,900 range before we start having, some consolidation, a little bit of selling, profit taking, and then we can work our way back up towards that, 52, 5,300 range, probably towards the summertime. But I do think that we still have some strength in gold. Now, looking over the Bollingers, and I'm going to hide the drawings for a moment. On the daily time frame, we potentially do have some more room to sell off. It does look like we're starting to build support at the 20-month, which is very indicative of creating a major bounce to the upside, and that bounce to the upside would close the gap at that 45.84, which would then pull us back to all-time high territory very, very easily. Now, looking over the hourly structure, we do have a very nice bullish structure here. We have a very, very, very clean inverse head and shoulders. And not only do we have an inverse head and shoulders, we have a cup and a handle with the breakout. Okay, so this is looking extremely good. And this should be a very, very massive buy all the way up to all-time highs. Um, I'm actually going to be entering a trade on this very likely come tomorrow, just because it looks so good. Very likely we're going to see something very similar with silver as well, but I do want to show you my actual gold ETF chart. It's going to look terrible, I apologize, but at the same time I kind of don't because it's important. Um, Ignore the yellow or that, the yellow buying channel. But these are consolidation channels that I've been tracking for a very, very, very long time. Okay. Now, obviously that one doesn't matter too much, so we're just going to delete some of these older ones. I haven't touched my gold chart in quite a while, as you can tell. But we will keep these consolidation channels going. Now, what this is showing is that this is a consolidation channel right here, and that this is a consolidation channel right here. Okay. Now, understanding how consolidation channels work, generally we see trading from the top of the consolidation channel towards the bottom. So for example, if you remember on the gold futures, I showed you how we were at that 20 mile range. If we're going to have a sell downward towards the lower Bollinger, I can almost guarantee it's going to be at the bottom of this channel, very, very close to the bottom of this major consolidation channel. So that's where I would be looking for a bounce if we're going to see selling. Now, I really don't think we will be seeing selling. Something that also likes to happen in these consolidation channels is once we start pulling into the range, if the market wants to reject this consolidation range, it will build support at the very top of the channel and then work to break out. So that's what we should really be looking for to identify if this is going to truly break out. Now, as of the overnight, the price is currently at 405. So in terms of this channel, that would be above the upper consolidation channel. So that does show that very, very likely we will be seeing that whole $13 move to the upside, and not just $13 to the upside, but we would close the upper Bollinger, create an upper Bollinger move, which day one of the upper Bollinger, we'd get, you know, closing at the level or above, and then day two, a higher high. So truly, we could be looking at the 422, 424 range very, very soon. Potentially even this week, but from the time frame, it looks like about a week and a half out for that move, but it's still very, very good for the entry if we don't sell down. Now, again, the overnight's showing a lot of strength. It does not look like we're going to sell down. And let's just go ahead and take a look over silver. See if I could find it. One moment. And going over silver, let's see. Silver does have a little ways to go with this selling potentially. I want to see what's going on with the hourly structure though. So the hourly structure looks very, very good. However, there's mainly one thing I'm concerned about right now. Okay. And it's that potentially we have a very strong double bottom here. And at the second bottom of the double bottom, we actually have, again, an additional double bottom. Okay, so we're seeing a lot of bull structure. Are we seeing bear structure? A little bit. We have a micro head and shoulders right here. We have a failed cup and handle, so that's not really a bear structure, more so just a broken bull structure. And right here, it still looks like we're trying to create a bull structure. So let me go ahead and label this with blue so that it is more easily visible. My expectation on silver truly looks like that we're going to see this cup close, and from that cup, building liquidity to hit the 73.22 all-time high again. Okay, and this is going to be very somewhat confusing because once that cup closes, you're very likely going to see a very sharp sell downward. Um, that selling downward could be potentially a whole $6 of selling, $7 of selling. Especially if they're trying to build this as a true bullish cup, they will work or they will aim for bearish structure at the top of this cup, meaning you will pull up above that, the previous cup's top to build that bearish structure. So that's the main concern I have about silver right now. The other concern I have about silver, and let's go back to the daily time frame. I'll turn off drawings, but that's that we have not tested the 20 mont in quite a while. It's looking on a little over a month now, which that's not unheard of. However, generally the 20 mont is tested once a month. I mean, that's why it's called the 20-day moving average. It's generally tested every 20 sessions. So with this being overextended, a 20 mont test is looking very, very good. However, that can take a while still. You can still see consolidation in this range as the 20 mont is pulling up, and then you can have that 20 mont test hit and then bounce from that. This looks a lot like when the SPY, hold on, excuse my drawings for a moment, but this looks a lot like when we had the original rally last year in SPY, where it was sitting above the upper Bollinger for quite a, or not the upper Bollinger, but the 20 mont for quite a long time, and it wasn't really wanting to test the level. It barely hit the level for less than 30 minutes during this trading session. For here, it was less than an hour. Um, Not a whole lot of support tests, and that can look very, I don't want to say dangerous, but it can be very, very tricky because from a technical perspective, you want to see support tests. Because that's how you target your buys, is basically buying up those 20 mod tests. Well, when you're not having any 20 mod test occur for, the previous 20 mod test was November 11th, it looks like. So it's looking very due for a 20 mod test. Again, going over the hourly, the structure does look bullish. However, again, you just have to be very, very careful. This can turn into a very large inverse cup quickly if we break down from the selling. As you can see, there's a little bit of a channel starting to form in here, so potentially we can pull down and really solidify a selling channel. Now, between gold, silver, and let's check out palladium really quick. We'll look at platinum first, just because it's first in my list. Let's see what's going on with platinum. Same ordeal. Um, Last time platinum saw a 20 mile test was back in November 28th. So it's not too unreasonable to see platinum head up from here, especially when we do have potentially bullish structure building here again. We have left shoulder, the head, need to build a right shoulder, and then you can build the cup all the way back up to that 24, 26. So if you're looking to trade platinum, there's probably a whole $4 to $5 upside currently in the actual platinum ETF. Now, palladium, very, very, very volatile, but we're seeing the exact same thing here. We're seeing this very strong inverse head and shoulders, and from that, it looks very good to clear that upside. And that upside on palladium is a whole $27 right now. So there is actually a ton of room. I might be playing this. Hold on. Looks really good. Um, on the daily time frame, we see the cup, top of the handle, potentially bouncing at this 20 mile range. In the overnight, we're seeing palladium being up a whole 1.36%. So that looks very good. That looks extremely good for a very nice contract, or, taking some actual shares just to profit on that upside. It looks extremely, extremely good. Um, yeah, that's what I have to say about metals right now. The one thing that I'm really looking at against metals is, again, the dollar. Now, we have been seeing the precious metals rising with the dollar. Now, we're also going to see the process of precious metals rising with a dropping dollar. Okay, now, if you've been watching my videos for a while, you know that I do see some bullish upside to the dollar. There's a lot of macro conditions that can cause this bullishness very quickly. However, we're still in the cycle of the Fed working to cut rates. We're still in a cycle where I do see a zero interest rate policy coming back. Okay, so that does mean that very likely we will be seeing a lot of weight lost within the dollar soon. And that's a good thing. I know that many think that losing weight within the dollar is a bad thing. That's not the case. It's generally a bad thing when we see the dollar rising very drastically. So it's still elevated. Generally, we should be seeing the dollar around the 87 um to 92 range. So again, we're still elevated quite a bit. Um, the dollar was trading. This is during the ZIRP period. That's the zero interest rate period. Uh, Back at $70. So technically, we're still extremely, extremely elevated on the dollar. And the last thing I kind of want to go over with metals is that one thing we're kind of seeing a correlation with is Bitcoin dropping as metals rise. Now, does this mean that a lot of Bitcoin's weight is actually just being transferred directly into precious metals, I'm not sure. That could be a very, very likely potential. But I have not gone over those markets. I have not tracked those orders. I'm not going to speculate on that a whole lot, other than the fact that we have seen literally hundreds of billions slash trillions of dollars removed from Bitcoin and crypto. And inversely, we have seen literally trillions poured directly into silver. So when you're seeing these major correlations and inverse between these major markets and instruments, you do have to ask yourself, is Bitcoin being liquidated to push up the heavy metal market? It's something to keep in mind. So if we start seeing Bitcoin taking on a whole lot of weight again, returning to the upside, clearing this potential selling gap that I've been talking about for a long time, we're starting to see it pull back upwards. So potentially we can hit that 107 again. But what we need to look for with Bitcoin and precious metals right now is that is there an actual correlation between Bitcoin price rising and precious metals falling with, precious metal prices rising and potentially Bitcoin prices falling. Now, one thing about Bitcoin that I feel still important is that the market is still very, very um in tune with where Bitcoin is trading. So if Bitcoin's having heavy selling or heavy consolidation, we're really seeing that throughout the SPY and the tech. Um, if Bitcoin's seeing buying, generally we're seeing that same buying within precious metals and the tech. Even though the buying on Bitcoin won't be some massive, multi thousands of dollars a candle. So keep that in mind. And quickly taking a look over treasuries, and I do want to take a look at the weekly time frame. This won't make a lot of sense to everybody. I apologize for a moment. I want to look at some. So on the weekly time frame, we're seeing some really good things from TLT. We're seeing one that we're trading above the 50-day moving average. Okay, that's a very good signal that we're slowly starting to break away from this consolidation. Granted, we're still trading fairly close to it. Um, the 50 mile is currently at 86.37, so it's really not too far away. However, if we continue trading above that range, then that trend is going to continue upward. Another trend that I think is something to take a look at is this 200 mile. We have not seen the 200 mile this close since basically April 1st of 2022. Um, almost 4 years ago. So with the 20 mile pulling down so aggressively, with the 50 mile starting to pull up, you're going to see some consolidation within these very long moving averages. And with this consolidation, it generally tends to create very large moves. Um, I know it doesn't look like it in here, but with consolidation starting to happen in this range right here, we see massive, massive selling. Now, this trend is not heading downward as much as this red line looks like it is. Um, the main thing to be looking at is primarily the yellow line here, because that yellow line is what's going to shift the red line. The 200 mile is going to be tracking this 50 mile. So once the 50 mile starts pulling back upward, the 200 mile is going to start slowly pulling back up. Now, once we get all of our short-term supports above the 200 mile, that puts us in an extremely bullish range. Technically, we have not seen that type of range since December of 2028 or 2018, excuse me, where the price went from 98 all the way towards the beginning of COVID to 151. Okay, so that's almost 100%. I mean, that's closer to 80%. Or my daughter's having a tantrum. Um, anyway, treasuries. It looks very bullish. Okay. Now, I know there's a lot of talk on the downside where they're saying, oh, well, inflation's going to be coming back because they're doing all this RPM. Again, that's the short-term treasury selling. But what RPM turns into is long-term treasury selling as well. And what I mean selling, I mean selling by individuals to the Fed. The Fed is buying those treasuries. That's a very bullish thing for TLT. Now, we're not seeing that fully reflected within the price action. Again, there is a lot of stickiness within the yields. Um, Sorry, my daughter's singing. There's a lot of stickiness within the yields. However, we're starting to pull above this 200 mile on the daily. And with this daily structure, we're seeing, I'm just taking a look at this. Bollinger move to the upside, lower Bollinger move. Looks like a lower Bollinger rejection, which that would be a bullish move. This would actually be working to complete our inverse head and shoulders to the upside. And let's go ahead and look at that on the 4-hour time frame. Actually does look very good. The only potential downside here is if we see a continuation of this inverse cup right here, that's marked in purple, then we would expect a handle to break us down below this major consolidation channel. If that occurs, then, sorry, my daughter's singing. If that occurs, then potentially, we could be headed down quite a bit. I don't think that'll occur though. And I might have said upper consolidation channel line. It's the lower consolidation channel line. Generally, when we build support at the lower consolidation channel, we generally trade from the lower part of the channel all the way back up to the top of the channel. Now, with the inverse head and shoulders looking very, very good there. Basically, we're just waiting to see a little bit of buying towards this upside. Sorry, I'm just taking a look at this, if this really broke that structure or not. No, that didn't. Okay, that's just, yeah, so that didn't break that buying channel yet. If this micro buying channel breaks, this yellow dotted line right here, then we will need to reevaluate things a little bit because potentially we could be seeing selling all the way back down to this major buying channel. And the major buying channel is the orange line here, and that level would be all the way to the 84.65 range. So I don't think that's going to happen, but we do have to be a little cautious just because we are at that buying channel. We are at a pretty indecisive range in terms of we need to break out or it's going to start dropping. Um, Basically that's what we're looking for. Now, this circle is supposed to be up here. Drawings always like to move. These circles are lower Bollinger moves on the daily time frame. It shows that almost every single lower Bollinger move creates very, very large buying to the upside. We haven't seen that with this lower Bollinger move yet, but generally history tends to say that we will. So I am still targeting the TLT calls for March. Currently I have 92 calls, 94 calls, and some 96 calls. I won't be really adding to any of those calls just yet until we start seeing some major confirmation to the upside, but we are at that indecisive range. Um, we need to start seeing some buying to the upside. And on top of that, we see the US 10-year yield starting to pull back up just a little bit. And it's starting to get to that range where it's a little iffy. Truly, I don't want to see this pull above the 4.3%. That would really show a trend shift that it's going to want to head back up towards that 4.5%, and that's not what we want to see. Again, with all the Fed posturing, with them cutting rates, with Japan hiking rates, there's a lot of reasons for the yields to pull down. Um, and truly, I'm still not set on the theory that inflation has been kicking back up. We have not been seeing that. We've been seeing a weakening labor market. We've been seeing precious metals, hitting all-time highs week after week after week. So I do think there will be some major buying to the long-term bonds soon. We've also been seeing a lot of banks and just big players starting to enter long-term bonds. There was JPM, I believe just a few weeks ago, where they bought over 300 billion worth of long-term treasuries. So big money is definitely targeting these long end treasuries. It's just the short end still has to fizzle out a little bit more before we can really start to see everyone have to target the long end treasury. Remember, with the RPM uh, process, you have to use short end treasury bills as collateral. You don't have to use the long end yet. So once all those short end bills are burned out of the system, they will start taking that long end collateral, and that's when RMP switches to QE, and that's when we really start seeing a lot of buying to the upside. That's when we see the dollar drop. That's when we see, the whole ZERP process, and that's entering the zero interest rate policy. So that's the video. I really wanted to cover a whole lot of different markets because I just haven't been able to in a few weeks. If you have any questions about anything I covered in the videos tonight, feel free to leave a comment below and let me know. Other than that, I will be continuing to post my spy videos for the week, and I will talk to you all in tomorrow's video. Thank you for watching, and I hope this helps you. I'm definitely looking at those Palladium, I'm gonna be looking at those Palladium calls tomorrow. Those look very, very, very good. Um, Probably about 3 weeks out. Same with the gold calls. A lot of upside to be had in those potentially. So hopefully we all make some great money off of these trades. I wish you all the best with it. And with that said, thank you all for watching. Thank you for supporting me in what I do so that I can hopefully help support you with what you do. And I will talk to you in tomorrow's video. Take care, everybody.